Morning guys. The trading week on Bitcoin ends with the beginning of a potential execution of the previously described bull trap scenario. Today I'll show where Bitcoin might fall and why, even with enough arguments for a correction, it may not unfold the way most people expect. Yesterday, Bitcoin broke above the 110,000 level. This aligns with the drawing from my previous videos. And so far, the trajectory of Bitcoin's price movement makes me genuinely optimistic. Because the match is precise, even down to the distance between the highs. But I need to make some adjustments to the chart, because these highs were taken out, and the price definitely has room to fall, from $107,600 down to $105,000. One imbalance after another, and I'm not even mentioning the imbalances at 104,500 and 102,500, because we still remember that this is the boundary of the range, the conditional trading range, where from time to time we see fake breakouts or just price touches. For now, everything is following this scenario where a correction down to $105,000 is possible and most likely. But for the price to break below 105,000 and move into the 103,000 zone, we already have specific arguments, and I'll break those down now. What suggests we're possibly just witnessing a local bull trap is the long-term market picture. We're now seeing the 5th week in a row of active Bitcoin outflows from exchanges. Bitcoin gets withdrawn from exchanges before major moves. If Bitcoin is leaving exchanges, then the move is likely upward. If it's being deposited, that means people want to sell. So for now, I don't consider a deeper correction as my main scenario and don't want to let it affect my positive outlook, at least until we have enough arguments to reconsider. On the 4-hour time frame, we can see how the price reacted to previously marked trend liquidity, and after that we got this rise, which was made up of strong green candles without any real pullbacks. These candles created a large number of imbalances, and let me remind you that one of the long-term bullish signs was also a sweep of this low in the range. Price quickly returned into the range with strong candles, and before a new move began, price returned again to fill as much as possible the imbalance of that very candle, and 2 new ones were formed. So if price approaches the 105,000 area, we'll need to watch how this correction behaves. A correction to 105,000 would be a very bullish sign, a signal that we're most likely repeating a past Bitcoin pattern from when it was at $7,000. Before moving higher, it left some imbalances unfilled, and it did this again a few times afterward in the same fashion. We might be seeing the same thing now. At this moment, we're literally following the previously described scenario where I said the most likely outcome would be a liquidity sweep around 110,000 and then a local correction from there. Price reached 110,450, but the 2 equal highs at 110,800 weren't swept, so perhaps just touching that order block was enough to trigger the local correction, which we're already starting to see now. We got a 5% move up from 105 to 110, and I covered that in a previous video. That was the first leg. And now we're watching the opposite move play out, because we want to trade both directions, long and short. Bitcoin has plenty of liquidity to sweep down to 103,500. There's a massive amount of liquidity there, which could be used as fuel to continue the bullish trend. There's not much short side liquidity left above the 110,000 zone. And judging by the chart, it's not entirely clear why price would want to return to 110,800 again. That would be pretty difficult, but if we drop to 103.5, that would be a very strong long scenario. On the 3-day time frame using the liquidation heat map, price is currently testing, but not closing below, the cluster around 108,400. The new 3-day candle hasn't opened yet, and so far price is showing a fake breakout. But in any case, this is a strong level and it was breached. So if even on the daily time frame the next candle opens below this area, it could be a warning sign that this entire zone, meaning liquidity down to 103,000, might still get traded through. On the weekly Bitcoin chart, I marked those significant imbalances since October 2023. Untraded imbalances are marked in white. Those already filled are in red. This confirms that Bitcoin does not necessarily need to fill every imbalance precisely and strictly before starting a strong trend move. It can leave imbalances unfilled, and has done that more than once. From $27,000 to $33,500, the imbalance from $42,500 to $48,000, here we see everything was filled. The imbalance from $78,500 to $67,300 was filled. The current imbalance from $92,500 to $80,500 is still unfilled, but everything above that from $95,000 to $103,700 is already filled. And it's possible that in this area, we'll see the next upward wave on Bitcoin. Ethereum filled the imbalance at 2,100, partially filled it, and then returned to the conditional range, sweeping this local low. Just like on Bitcoin, this is clearly illustrated, and this is exactly what we're seeing now. Long targets for ETH in this case are around 2,900. That imbalance hasn't been filled either. Solana still looks good long term. We swept this low, then formed a new bullish structure. It tested the imbalance at 127 and on the daily chart filled the June imbalance. Now it's showing a corrective move, so we may still see consolidation on Solana. But below 137 things could become problematic, so the two key levels are 145 and 138. Long term, I'm still strongly bullish on Solana. To conclude, I'd say the current market situation is very favorable for trading both long and short. That's why I regularly post updates. Make sure you're subscribed to the channel and I'll see you in the next video.